Hello again, and welcome back, everyone. Thanks for taking the time to join me along this journey of discovery through GameStop daily reviews. The journey of discovery, really? Wow. Oh, maybe more than I was looking for in today's video. We'll see. I don't know. As always, just gonna go over the daily price action, go through some data, and look to the days ahead. We are 12 days till earnings. That's going to be on the 9th of September. So, about 2 weeks away. It's a good time to start positioning yourself for that earnings run up. It's a little bit later than I would have expected, but, that's okay. You can't rush these things. Wizard arrives exactly when he means to. So with that being said, we're up today, 1.3%, which is awesome. And yesterday, I think, was a bit of a green day as well, which is pretty cool. So back-to-back green days. Can we string a few more onto this? And, well, I kind of think we can. So here's today. Up at the top, we got this morning gap up. I think the S&P 500 gapped up as well. There was NVIDIA earnings last night, and it looked kind of bad. But then it came back, as it always does. And NVIDIA was actually down on the day a little bit. But NVIDIA earnings last night jumped down, and then this morning jumped up, and then I guess we're just trading literally sideways here today, which is good. I mean, the market's not crashing, right? It wasn't terrible earnings, and it didn't send the market spiraling down, and then, it would be a lot harder for us to gain positive momentum within downwards pressure environment on the broader market. So, good news for us. And we do get that gap up this morning, kind of bleed down, and then, this morning reversal here with our key level breakout, kind of fighting for it. It takes a few tries to really reclaim and hold VWAP, but once we get it, then we do see some separation or expansion, which is great. Again, it's not much, but it's nice to see the stock moving the correct direction, or at least the direction I'd like it to. So, that's kind of what we're looking at on the intraday chart here, the 1 minute, and then the 1 day chart, which isn't super relevant today, but we're still in this box of accumulation, and I feel like we will be for some time. Whether or not we get this manipulation leg is to be seen. If we don't, great, good news, but if we do, just be prepared for it. It's not the end of the world. It's kind of to be expected. So we've got our 21 exponential moving average here in teal, where we're really, we can't reclaim it, right? We try to reclaim it here, but ultimately it's a hard rejection down off the lower band of this gap, which we did reject here as well. So that sends us spiraling down to the lower trend line here, which is a long-term trend support. So that's pretty strong, and that would be a great place to manipulate down, right? So there's going to be a lot of stop losses below, and that's how this pattern works. If you're unfamiliar, right, you've got a prolonged period of accumulation or consolidation. The longs are going to put their stop loss below, right? The shorts are going to put their stop losses above. The market maker is going to take advantage of this pooled liquidity and just flush it out one way and then rip it the other. Why wouldn't they, right? However, we are maybe reclaiming that 21 moving average, right? And we tried it, a couple times, failing each time. So let's get above, 23 and hold it, and then start to challenge, 23.50, like we did here, but not reject. Hopefully, maybe get into that because it has retraced quite a bit. Like we're no longer challenging the gap, which made it, I think, a little bit harder on this last try. So maybe this time we get it, and then that's going to give our moving averages, both the 50 and the 21, a chance to reverse here, right? Because we are in a bearish formation. Once these reverse, then it's going to look really good on the 1 day for a prolonged run, right? Like the last time we had a reversal here, right? We ran from 26 all the way to 35, right? So it is pretty substantial, and it does give us confidence into the future, I guess. And just like how we don't like the bearish setup, right, on the 1 day. We had it here, we had it here. That's going to give us, prolonged downs after that. And, my trading is not advanced. It's very basic, and it treats me right. So I don't think you have to learn too many things, but we have been actually going through indicators with you guys, which is pretty cool. But let's move back. So this is the 1 day. Let's go to the 4 hour, and we can see that we're still not setting this reversal, but it will probably set tomorrow as long as the price stays above the 50, right? So that's fine. And then the 1 hour should have already reversed. We see it here, and we're also pairing that with our key level, the 200, right? See how we rejected it? Now we have a reversal, and we're pairing it with a breakout. So let's hold that key level and base above it for more. Again, the 1 hour becomes a little bit more sporadic where you get these whipsaws, more signal sets, like it's setting bearish, setting bullish, setting bearish, setting bullish, all through the accumulation zone. So you just kind of work your way out typically, right? Like even the 30-minute, if we want to go into that, we set this the other day, right? And then, okay, this is set. Let's see if we can hold it. Actually, I guess we set it this morning. Pardon me. But then, I look at the 30-minute, then I look at the 1 hour, and then, okay, let's go to the 4 hour and just keep moving out to a larger time frame where things become, a little bit more solidified. There's less of the, the back and forth false signal sets. And we can kind of gain a little bit more confidence as to where we're going. And again, these are lagging indicators, so you can kind of forecast where they'll go based on the current price. So the price is above our moving averages, so they're going to trend upwards, right? And this 21 is a faster average than the 50, so it's going to trend up faster, which means it's going to cross the 50 and cement that reversal signal on the 4 hour. And then, we're looking at the 1 day again, right? Where we want to see that same thing happen, where we get the price up above the 50, and that's going to allow the 21 to get up and cross it as it catches up to the price faster than the 50 and much faster than the 200, right? So let's get those reversals. Let's get into the daily gap and try to fill that up to 2850 here. So that's kind of what we're looking at price action wise. Data today, people are complaining about the off exchange volume, so let's just kind of look at that. So we see, that kitty return, the squeeze, and if we look at the average here, I can even just pull this up, so it might be easier. And then we'll do, like, what's the average? You figure, like, 50 right here. This is kind of the median, like we're down a little bit here, we're above here, below here, above here, below here, right? So that's like a nice average for the off exchange volume. But then we see the bond offering, right? And the off exchange volume shoots up to new highs. And then again, new highs here. Second bond offering, right? So here's the first one on this massive dump. Here's the second one on this massive dump. And we see that this average is no longer average, right? Because there's very little below, like just barely going below, like not at all. Whereas before, it was like below a lot, right? And now, the majority of it and almost the entirety of it is far above its old average. And, what's this new average here? Probably something like this, right? So we're going from, that's 50% average up to 60% easily, just eyeballing it, right? So the off-exchange volume increasing, kind of explains our price suppression, right? Where, a lot of these institutional longs that we see through the filings that come out, they're accumulating. Where's the price improvement for these millions and millions of shares that you've been buying? We don't see it because it's in block orders in the dark pool. So there's that. just to explain what this is about. As far as I'm concerned, today was 72%. The last 30 days is 60%, which is kind of what we were drawing out there, right? So you can see just how high today was, um, and then so we're up today. We're quite green. Um, how much more green would we be if all that hit the lit exchange, etc. Um, I don't mind. It'll come through eventually, so it's whatever. Um, yeah, we talked about this. The options chain we can look at. Let's go through other stuff quick first. Utilization 65%. We have that here as well. Um, it's kind of bouncing between that 55, 65 point. I think we'll continue to see this fall down into that 40% range as we get a little bit closer to earnings. We have our short interest here as well, a little bit under 17%. We'd like to see that climb, but it is what it is. We'll see. I don't really pay attention to the short interest anymore post swap because we know something happened to it, right? And we know the short interest wasn't relieved via the lit market. So that's I think, and so we see a lot of people tracking these swaps. This is just a tangent. Is it? I thought the swap data was hidden from the CFTC until 2028 or something at this point. So I find maybe potentially strange. I'm not dug into it. We can if you'd like. A lot of people are tracking these swaps. How? How are you tracking these swaps when we don't have access to the swap data until 2028? Or maybe we just have some old data, right? But I think that's where a lot of that short interest is, and I don't think it'll come back until all of that resolves itself, which again is probably sometime into the future, a couple of years still. Shares to borrow, the fee utilization, we'd like to see that borrow rate increase. And then we have our options chain, which we can kind of look at quickly here. A couple things I found odd. First and foremost, if we go to Jan 2027, we've seen people yelling about some 30s, which is great. But what about all these $10 puts? This is today. This is 13,000 $10 puts for 2027. Right here. That is a massive bearish bet. They're very cheap. They're only $1.07. Honestly, not that cheap. Someone dropping, a couple dollars on that, right? Because this is like $107 times 13, so it's like 130K or whatever, right? That's a fair bet. To be putting a $10 put. Who thinks GameStop's going below trend line? Right? This guy does. So is this part of a larger trade? Could be. Could be a hedge for a long, right? Someone goes long GameStop, millions of dollars, right? And then they take $130,000 short position just as a hedge, right? That could be, protect yourself and limit your risk. Just the volume on this is insane. So I noticed that stood out to me today. Just when we were kind of ripping through things here, we do see some volume elsewhere. Let's just kind of go through everything. Even on the 2027s, again, a lot of puts, right? These are $8,000 $5 puts opened up there. Which is crazy. Crazy stuff. But at the same time, we've got 5,000 calls, another 5,000 calls. But what an aggressive, and it's not that cheap, right? These would be even more expensive. Oh, those are calls. Sorry, cheaper. Well, I guess it's half the strike. So 62 cents or $62 per contract. Um, just a lot of them. A lot of them. So thoughts on that? Let me know in the comments. You think it's just a hedge for a long? Is that part of a larger strategy, potentially, or just like straight up a bearish bet? Going through, June's got really nothing going on here. That's only 62. Just looking at for volume today, right? It's kind of easier to do it visually based. 800 calls here at 23. That's a nice strike. This was a busy day. The leaps for 2026. Not really any volume here. Like 100 shares, whatever. But 1.2K at 23. 800 at 24, 25. So that's pretty cool, right? 700 at 30. So good bullish volume here. At the money, just out of the money. We like that. October 17th. This is probably my favorite expiry date right now. And this is beautiful, right? 600 calls at 20 in the money. Ooh, build that ramp up. And at 22 as well. I like it. Then at 23 and at 24 and at 25. So we want to, at this point, build out the 26. So we, even maybe the 21s, but those are in the money, so it probably shouldn't matter much. Where the open interest falls off, like we see it dead here at 29, and it's pretty low between 26 and 27. It gives the market maker a chance to swing momentum the other way, right? Like that. They don't have to hedge within this gap like they do here. So it gives them like a little bit of room to kind of throw momentum the other way, easier than within a typical ramp, right? So if we could fill in these, I'd love to see that, get some more volume here. And maybe, we see that come as this price gets up to 25, right? And then people are willing, because now it's not, now 26 is just out of the money, 27 is out of the money, right? Instead of playing so far out of the money, which is dangerous. But this is going to be a great first step. I like that. Moving forward, still really good bullish flow here, 20, 24.50, and then up at 30, but nothing much. Like these are just 100 contracts. 5K here at 26 or September 26. I like that. And sometimes, like we had that hole at 26, 27, 28, sometimes the different expiries will fill in the different strike holes, if you will, if they're close enough. This looks really good too. September 19, really filling it in. 2027s and a lot at 25. That's awesome. A lot of puts at 21 too, though. Really 22, 23, 21. So there's some bearish bets here as well. And then quite a few here. What is this? This is 500 puts for 22. Which, whatever. 22 puts, I get it. But 10 puts and 5 puts? What is going on? Those are that's just got to be a volatility play, right? Where they want that spike downwards. They exit on that, that aggressive candle. Like you're not holding those to $10 or $5. You just got to get out on one big red bar if a market crashes or something, right? So just like I would hold the 65s long for a volatility spike. I'm not necessarily holding them until the price gets to 65, but maybe the price goes to 40 and I sell the 65s on that pop, just, with that IV spike. Moving forward, September 5th, 5,000 here at 23, which honestly, it's nice to see people playing this this early, because I'm not playing September 5th. No way, that's too close for me. But it's nice to see people still participating, because this is going to be what supports the price. There's a good chance that people buying these 22s, 2250s, and 23s is what, you know, kind of pushed the price up here as the market maker, begins to hedge those contracts. And then, the weeklies, you guys are insane. Like, there's so many weeklies. 10,000 2350s. And I get it, they're pretty cheap, but like the risk on those is high. 14,030, no, that 35 can't be right. Let me refresh. 14,023s, only worth $9 each. So, the dollar value that's flowing in and out of them is probably similar, even less so. But it looks aggressive, and it is aggressive because these $9 contracts are going to be worth $6 tomorrow, just because theta decay. What is today? Thursday. Tomorrow's already Friday. Yeah, tomorrow's the last day of the week. They're going to be worth $0 tomorrow, unless we get a massive squeeze and these contracts go from like 9 cents to $1. We've seen that. We'll check in on them, right? I love that stuff. I live for Friday zero, because typically you only get 0-day expiry contracts on like the S&P 500, right? Or SPX, whatever. So to get them on whether it's a GameStop or a Google, whatever, typically these contracts are expensive on the large caps, and if you get them on 1 day or 0 days of expiry, they're quite a bit cheaper because there's no theta left on them. And if you get a nice price movement, you can swing these massively, like thousands of percent, but super high risk. The chance that they pay off is like 1% less, right? And that is why they're so cheap. But we'll check in, and it has happened before. We get Friday runs on GameStop, and that Friday run would send, if we ran to 25, these 23s are going to be worth $1, and that's massive price improvement. So good luck, everyone, on those weeklies. I love to watch. I don't necessarily participate that close to expiry, but always checking it out. So that's that. This is our options, and the price is chilling. We've got 12 days till earnings. No, we've got like Switch 2 sales. We've trimmed more of the overhead, right? Like the Canada operations got sold. I'd expect more of that to be taking place. The store closures. I don't think we'll get any Power Packs revenue this quarter. But the Switch 2 should be enough to carry us. Really excited to see that. So it's earnings. Let's talk at Best Buy. Right, Best Buy had earnings today, and they were green. Surprise, earnings per share 5.5, revenue 2.3. Not great. And they kind of did their thing, the volatility once earnings hit, spike, drop, spike, just going crazy. And at open, everybody closes their contracts, the whole chain crushes, massive theta, or not even IV crush, sorry, not theta. But it holds, it's not down too bad, 4% on the day. And this is what people say happens to GameStop. Drop on earnings. It's the same sector, and trying to keep an eye on all of these different companies while we are in earnings season, waiting for GameStop. Specifically ones that are in a similar sector. We took a look at Kohl's, Best Buy today. We'll see what happens tomorrow, and then of course next week as well. So, my kind of thesis right now is if GameStop runs into earnings. If we see this run into the gap, up to 24, 25, then maybe we do dump on earnings. But if we continue just to like hug the lower trend lines here, I think earnings might send us up, 20% or something. We might actually get a God bar, but we'll have to wait and see. And it's kind of easy to know what tomorrow brings, but to push that out further, weeks away, months away, it does get a little bit trickier. So we'll see. Our daily bias for tomorrow is obviously going to be bullish after today. But anything can happen, of course, right? So cheers. Thank you for watching. If there's anything I can touch on that you want to incorporate into our kind of a daily rhythm here, hit me up in the comments below. Glad to discuss anything GameStop related, of course, and very much looking forward to some greener days. We'll see you soon.